Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Commodity prices are still falling after last week's crazy surge. The retreats are widespread and substantial. Oddly, it isn't having much effect on commodity-based currencies, however. But first today, January factory PMIs for the US were positive, based on good new order growth. The closely watched local ISM version expanded for the first time in 12 months, preceded by 26 straight months of contraction. Prices rose sharply for both inputs and outputs, and some buying appears to be to get ahead of expected price increases due to ongoing tariff issues, they said. Meanwhile, the S&P Global Factory PMI came in with similar trends, finding rises in production when sales growth was subdued. These two surveys are positive, but we should remember that January is reorder month, and with the tariff threats lingering, it might mean this distortion is playing an outsized role. In China, their PMI trends are not too different from the US, even if they are in contrast with their official version. They reported an expansion in production at a faster pace amid new higher orders. Employment rose, output charges increased for the first time in 14 months. In Taiwan, their factory sector recovery gathered pace in January, but cost pressures intensified there. In Singapore and Malaysia, they recorded a January uptick, but the expansions are still modest in their factory sectors. India and the US announced an agreement to lower tariffs and lower the temperature in their trade disputes. Given that India's exports to the US were already rising even with the higher tariffs, this is likely to be a substantial boost for India. And back in the US and under the radar, they've entered a new federal government shutdown with layoffs. This one is expected to be short because of a deal between Congress and the White House seems to be in effect, but it will delay this weekend's non-farm payrolls report announcement. In Australia, Cotality said low supply levels, first-home buyer incentives and a resilient labour market are combining to keep house prices rising. They're up 9.4% nationally from a year ago, but there is wide variation. They said mounting affordability and debt headwinds are butting up against fragile sentiment. This is especially true where the prices are highest in Sydney and Melbourne, where prices only rose 6.4% and 5.4% in January from a year ago, the least of any major cities. The median house price in Sydney is now 1.2 million Australian dollars. It is now also above $1 million in Brisbane. The US Treasury 10-year yield is now just on 4.27%, up 3 basis points from yesterday at this time. And the price of gold will start today down $183 from yesterday at $4,707 an ounce. Silver is down $6 to $78.50 an ounce. Non-precious metals are falling hard too. American oil prices are down $3 at just under $62 a barrel, while the international Brent price is now just on $66 a barrel. And the Kiwi dollar is down 20 basis points against the US dollar from yesterday, now at 60.1 US cents. Against the Aussie, we're also down 20 basis points at 86.3 Australian cents. Against the euro, though, we're up 10 basis points at 50.9 euro cents. That all means our trade-weighted index starts today at just under 63.8 and down 10 basis points from yesterday. And the Bitcoin price starts today at $78,946 and recovering 2% from this time yesterday. But volatility over the past 24 hours has been high, at just on plus or minus 3%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.